It's kind of crazy when you see those headlines.
Yeah.
Millionaires paying like a ridiculously low percentage of taxes.
Yeah.
And it's always like, hold on, is that even legal?
Yeah.
Like, how is that even possible? And meanwhile, I'm over here stressing over every single deduction, trying to make sure I'm doing everything by the book.
It's a common frustration for sure.
Yeah. It feels like almost like there's a secret playbook or something, right? Like a set of rules for the wealthy that the rest of us don't know about.
I get it. I hear that a lot. And the tax system, I mean, it can feel super complicated, to be honest.
Yeah.
But the thing is, there's a really big difference between, legally avoiding taxes and illegal evasion.
Okay.
So high net worth individuals, they often use specific strategies to minimize what they owe, but it's all within the legal framework.
Gotcha.
And that's what we're going to be kind of taking a comprehensive analysis of today.
Okay.
Yeah.
I'm glad to hear that, because honestly, sometimes it does feel like a whole other set of rules. You know what I mean?
Right.
Like, and I'm all for playing by the rules, don't get me wrong.
Yeah.
But I also want to make sure I'm not missing out on any opportunities, right?
Yeah.
To keep more of my hard-earned money. So let's break it down. What are some of the most common ways that that wealthy people use to legally reduce their taxes?
So I think one of the most powerful strategies, and often overlooked, is really maximizing your contributions to tax-advantaged retirement accounts.
Okay.
So we're talking about your 401ks,
Right.
IRAs,
Yeah.
things like that. Because, these accounts let your money grow tax deferred, meaning you don't pay taxes on any of the earnings until you withdraw the funds when you retire.
Right.
But here's the thing that I think people miss. Contributions to these accounts can actually reduce your taxable income right now.
So wait, are you saying I can actually lower my tax bill today
Yeah.
by putting money away for retirement?
Absolutely.
Okay.
Yep.
That
Yeah.
sounds like a double win.
Exactly.
I've always been a little confused about how much you can actually contribute to these things, though.
Yeah.
Does that amount change?
It does change. The contribution limits can fluctuate from year to year.
Oh, okay.
So for 2024, the 401k contribution limit is $23,000.
Okay.
And if you're 50 or older, you can actually make an additional catch-up contribution of $7,500.
Wow.
So you could potentially, be putting away over $30,000
Uh-huh.
and sheltering that from taxes this year.
Okay.
And then with traditional IRAs, the limit is it's $7,000 with a $1,000 catch-up again for those 50 and older. The key here is, just to be strategic about your contributions. Even if you can't hit that max every year, every dollar that you put in lowers your taxable income.
Yeah.
Which can lead to some serious savings over time.
Okay. Yeah. No, that makes a lot more sense. I'm definitely gonna take a look at my retirement contributions.
Yeah. Good idea.
After all this.
Absolutely.
So okay, but let's say, hypothetically, I'm already maxing out those retirement contributions.
Right.
What other tax saving strategies should I know about?
So another really, really powerful tool, and this is especially true for high-income earners, is the health savings account,
Oh,
or HSA.
okay.
And these accounts are designed for folks with high deductible health plans,
Right.
and they offer a triple tax advantage.
Whoa.
Yeah, so contributions are tax deductible, the money grows tax-free, and withdrawals for qualified medical expenses, you guessed it, those are tax-free too.
Wait a minute. Triple tax advantage. Hold on. That sounds like a fantasy, honestly.
Yeah, it's a pretty great deal.
Yeah. Is there a catch?
I mean, the main requirement is that you have to be enrolled in a high deductible health plan
Okay.
to
Yeah.
qualify.
That makes sense.
But if you are, HSAs are a fantastic way to save for healthcare costs, both now and in the future. And what's really interesting is you can actually invest the funds within your HSA.
Oh, wow.
So you can let those grow even more over time.
So it's like a supercharged savings account, but just for healthcare.
Exactly.
Okay.
Yeah.
I'm starting to see why this is a favorite for people with a lot of money.
Yeah.
It's not just about saving on taxes now. It's like you're being strategic about planning for those future expenses.
Right. Thinking ahead.
Okay, so we've got retirement accounts, we've got HSAs. What other legal tax minimization strategies are out there that maybe I should be aware of?
So let's talk about something called tax loss harvesting.
Okay.
Okay, so this involves strategically selling investments that have declined in value
Okay.
to offset capital gains that you've made from other investments. So essentially, you're using those losses to lower your overall taxable income.
So if I've got like some investments that are down,
Hmm.
you're saying I can use those losses to actually lower the taxes that I owe on my winning investments.
Yes, you got it.
That's wild. It's like turning lemons into lemonade, financially speaking.
Exactly.
I got to ask though, that almost sounds too good to be true.
Right.
Is that even legal?
It is. It is absolutely legal. The IRS recognizes it, and a lot of smart investors use it all the time.
Okay.
It's not about manipulating the market or doing anything shady. It's just about being smart with your investment portfolio to minimize that tax liability.
Right.
Like, imagine you have, let's say, $10,000 in capital gains, but you also have an investment that's down $5,000.
Okay.
By selling that losing investment, you can actually offset half of your capital gains,
Oh, wow.
which reduces your taxable income and ultimately lowers your tax bill.
Okay. Yeah, no, that example definitely helps. I'm starting to see how that can be like a really powerful tool for managing your investments in a way that's tax efficient.
Right.
Okay, cool. So we've got like retirement accounts, HSAs, tax loss harvesting. It's like I feel like there's a whole new world opening up
Yeah.
here of tax saving strategies.
That's a lot to learn.
Yeah.
Yeah.
What other like clever tactics do wealthy individuals use to kind of minimize their taxes? I'm curious.
So, believe it or not, charitable giving can be a powerful tool for reducing your tax burden, especially for those high net worth individuals.
Okay.
And specifically for folks who are 70 and a half or older, there's this thing called qualified charitable distributions,
Okay.
or QCDs for short. And what these do is they allow you to donate directly from your IRA to a charity.
Wait, so you're telling me that I can like lower my tax bill by donating to charity?
You can.
That's amazing. How does that even work?
It's built into the tax code.
Oh, wow.
Yeah, so QCDs, they satisfy those required minimum distributions
Right.
that you have to take from your IRA
Okay.
without actually increasing your taxable income.
So it's really a win-win.
It is.
You support your favorite charities
Right.
and potentially save on taxes.
Absolutely.
I'm gonna have to tell my grandma about that.
Good idea.
She's a big giver, and she's always looking for ways to maximize her impact.
Yeah.
So, okay, what about for folks who aren't, quite 70 and a half yet?
Yeah, good question.
Are there any charitable giving strategies that can, benefit them tax-wise?
Yeah, there are. So donor advised funds, or DAFs, are another great option.
Okay.
And so you can contribute assets to a DAF, you can claim an immediate tax deduction for that contribution, and then you can actually recommend grants to your chosen charities over time.
Oh, well.
So it's like, it's a flexible and strategic way to kind of plan your charitable giving while potentially, getting some tax benefits.
So it's kind of like having your own, like, personal little charitable foundation,
You got it.
but without all the administrative headaches.
Exactly.
I love that. It's amazing how, like, these seemingly simple things like saving for retirement, donating to charity can have such a big impact on your taxes overall.
It's all connected.
Yeah.
Yeah, it's not just about, loopholes or tricks. It's about understanding those rules, that framework, and using it to your advantage.
Okay. So we've got retirement accounts, we've got HSAs, tax loss harvesting, charitable giving. What about like some of those more complex strategies you hear about?
Right.
Like family trusts, business structure optimization, things like that.
Yeah.
Those sound like they're like, straight out of like a high finance playbook.
You're right. Those strategies are definitely used by people with more complex financial situations, but they're worth understanding. So gifting strategies, for example, are a really powerful way to transfer wealth to your loved ones, but minimize any potential gift taxes that might come along with that.
Right.
And then family trusts, those can be incredibly useful for managing and protecting your assets, especially as part of a comprehensive estate plan.
Okay. My brain is getting a little full.
Yeah.
We've covered so much.
We have covered a lot.
I think it's safe to say that there are a lot more tax saving strategies out there than most people even realize.
Absolutely.
But before we get into those, even more advanced tactics, I think I think our listeners, myself included, might be wondering, like, okay, how do I know I'm not breaking any rules here?
It's a great question.
With all this talk about minimizing taxes, like how do we make sure that we're staying on the right side of the law?
That's a really important point. And I think that the line between, legal tax avoidance and illegal tax evasion can sometimes feel a little blurry,
Yeah.
but understanding the distinction is so important.
Yeah.
So tax avoidance, like what we've been talking about, is about using existing tax laws to your advantage, strategically planning, maximizing those deductions and credits, but doing it within that legal framework.
So tax avoidance is like playing the game by the rules,
Yes.
but knowing all the best moves.
Exactly.
Okay.
Tax evasion, on the other hand, is like that's deliberately hiding income,
Yeah.
claiming, false deductions or just not filing your taxes at all.
Right.
And that's where you cross the line.
Yeah.
And those consequences, they can be pretty severe.
Okay, yeah. That's definitely not a game that I want to play.
Right.
So how can we, like regular folks like us,
Mm-hmm.
how can we make sure that we're staying, on the IRS's good side?
Right.
Well, while still taking advantage of all these tax saving opportunities that we've been talking about.
Transparency is key. When you're using legal tax minimization strategies, you're not trying to hide anything.
Okay.
You're just being, smart and strategic about how you're managing your money.
Right.
And if you're ever unsure about a particular strategy, it's always best to just, check in with a qualified tax professional.
Yeah, it's better to be safe than sorry, especially with the IRS.
Absolutely.
Okay, so we've got a good understanding of the legal side of all this.
Right.
So I'm ready to dive back into some of those more advanced strategies,
Yeah.
like you mentioned, gifting strategies and family trusts. Tell me more about those.
All right, let's do it. Let's
Yeah.
start with gifting.
Okay.
Okay, so with gifting, the IRS lets you give a certain amount of money to any individual each year without having to worry about gift taxes. It's called the annual gift tax exclusion, and in 2023, it was $17,000 per recipient.
Hold on. So I can just give someone $17,000,
Yep.
and neither of us have to report it or pay taxes on it.
That's right.
That's incredible. Is there a limit to how many people I can give gifts to?
Nope. No limit. And this is a strategy that can be really, really effective for estate planning purposes.
Okay.
Because by gift in assets strategically while you're alive, you can actually potentially reduce the size of your taxable estate,
Okay.
which can lead to big estate tax savings for your heirs down the road.
That's brilliant. It's like you're proactively managing your wealth
Right.
to minimize those future tax hits.
Exactly. Planning ahead.
Okay. So gifting is one way to kind of transfer wealth. What about those family trusts you mentioned?
Yeah.
Those sound a little more complex.
They can be complex for sure. And
Yeah.
they're not, a one-size-fits-all solution.
Right.
But they can be very powerful tools for protecting and managing your assets.
Okay.
Both, during your lifetime and after you're gone.
Okay. So basically, a trust is it's like a legal entity, right?
Right.
That holds your assets for
Yeah.
the benefit of your beneficiaries, whoever you designate.
Exactly.
Okay. And you can kind of set the rules, right? About how those assets are managed, how they're distributed.
You got it. Yep. So you can make sure your wishes are carried out, according to your plan.
So it's like having a designated guardian for your assets,
Yeah.
making sure they're used responsibly and according to your intentions.
Yeah, I like that. It's a good way to think about it.
Okay. So what are some of the key benefits of using a trust, as part of your overall wealth management strategy?
So one of the biggest benefits is asset protection. Assets that are held within a trust, they're generally shielded from creditors, lawsuits.
Oh, okay.
So it provides, an extra layer of protection for your wealth.
Yeah.
Trusts can also be really helpful for minimizing estate taxes.
Okay.
So by transferring assets into a trust strategically, you can potentially, again, reduce the size of your taxable estate, which can save your heirs a ton of money in estate taxes later on.
That's fascinating. It's like building like a financial fortress around your assets,
Yeah.
protecting them from potential threats.
Right.
And
Yeah.
minimizing those tax liabilities.
Exactly.
Okay, so we've covered gifting strategies, family trusts. What about that other strategy you mentioned, the business structure optimization?
Right.
That sounds like something for for entrepreneurs, for business owners.
It is. Yeah, you're exactly right. So the way that you structure your business can have a huge impact on your tax obligations.
Uh-huh.
Choosing the right legal structure,
Right.
whether it's a sole proprietorship, partnership, LLC, S corp, C corp,
Right.
it can really affect your tax liability.
Wow. So it's not just about like running a successful business. It's
Right.
also about being smart about how that business is structured from a legal standpoint.
Yeah.
I'm guessing there's no like one size fits all answer here
Right.
when it comes to business structure.
Definitely not. It depends on a lot of factors.
Okay.
Yeah.
So like what are some of the key things to think about
Yeah.
when you're choosing a structure for your business?
So, it depends on what type of business you're running, what kind of liability protection you're looking for, your long-term growth plans, things like that.
Right. Yeah.
For example, C Corp, they might offer lower corporate tax rates
Okay.
compared to personal income rates for, a sole proprietorships or S Corp.
Yeah.
But they also come with, more complex filing requirements and potential double taxation on dividends. Oh.
LLCs, on the other hand, offer some flexibility and what's called pass-through taxation,
Yeah.
where the profits and losses are reported on the owner's individual tax return.
This is getting complex. It sounds like there are a lot of nuances to think about. Probably wise to talk to a tax pro or a legal advisor to make sure you're making the best choice.
For sure. Absolutely. Navigating business taxes can be tricky.
Yeah.
And getting that expert guidance can really save you a lot of headaches and potential problems down the road.
Okay, so we've covered a lot of ground. We've talked about retirement accounts, HSAs, tax loss harvesting, charitable giving, gifting strategies, family trusts, business structure optimization. It's clear that there's a whole universe of tax saving strategies out there.
There is. It's a lot.
And understanding these strategies, it can be really empowering.
Yeah.
Both for individuals and for business owners.
For sure. Absolutely. But amidst all this talk about minimizing taxes, there's one thing that I think we need to address, and that's, with the Tax Cuts and Jobs Act set to expire in 2025.
Right.
What does that mean for these strategies? Are they still going to work?
Yeah, that's the big question.
Or are we looking at some major changes?
Yeah, it's a great question and one that I know is on a lot of people's minds.
Yeah.
The sunset of those TCJA provisions, it could really shift the tax landscape. Some of the, exemptions and deductions that we've talked about, those might be reduced or even eliminated. So it's really important to be proactive and start thinking about, okay, what steps can I take now to optimize my strategies while these provisions are still in place?
So it's like a ticking clock.
In a way, yeah.
Like we got to act fast and make the most of these strategies while we still can.
Exactly.
Okay, so what are some specific things that our listeners can do to kind of get ready for these potential changes?
So one of the most important things you can do is sit down with a qualified tax professional and review your current financial plan.
Okay.
They can help you, see where you stand now, identify any potential, areas of vulnerability, and really develop a proactive strategy to adapt as the tax landscape changes.
So it's kind of like having like a financial navigator,
Exactly.
to guide you through these uncharted waters of tax reform.
I like that. Yeah, that's a good way to put it.
What are some other proactive steps that people can take to prepare for that sunset of the TCJA?
Well, if you've been thinking about making any, big financial moves, like a large charitable contribution or a major investment decision, now might be the time to act. You could potentially benefit from those current tax provisions before they maybe become less favorable.
So it's like a call to action.
Yeah.
Don't wait. Evaluate your options.
Right.
And make those strategic moves while you still have the advantage of the current tax landscape.
Exactly.
This is all really, really valuable information.
Good.
And I'm sure our listeners are feeling a lot more informed, a lot more empowered.
I hope so.
When it comes to their tax strategies. But before we wrap things up, is there anything else that you want to emphasize?
I think the main thing to remember is that, while we've talked about a lot of strategies today, everybody's financial situation is unique.
Right.
What works for one person might not be the best approach for another.
Right.
So before you make any major decisions, it's always best to talk to a qualified tax professional.
Yeah.
They can give you personalized advice, taking into account your specific situation, your goals, everything. Think of them as like your financial allies, guiding you through those intricacies of the tax system
Right.
and helping you make informed decisions.
That's such a great point. It's
Yeah.
about finding the right strategy for your individual needs,
Yeah.
not just blindly following a generic playbook or something.
Exactly.
Well, I think we've covered just about everything we can fit into this comprehensive
I
analysis.
think so.
I have to admit, I'm feeling a lot less overwhelmed and a lot more confident when it comes to navigating, the complexities of the tax system. How about you?
Absolutely. Yeah, it's been a pleasure sharing these insights with you and with our listeners.
Yeah.
And remember, knowledge is power.
Yeah.
And understanding the tax system is a huge step toward taking control of your financial future.
Well said. So to all our listeners out there, we encourage you to take action.
Mhm.
Start researching, start exploring your options, and start building a brighter financial future.
Absolutely.
And who knows, maybe you'll even start to look forward to tax season. Okay, maybe not.
Yeah.
But at least it won't feel so intimidating anymore.
Yeah, hopefully. I think that's a good goal.
All right. Well, thanks for joining us for this detailed discussion.
Absolutely. Thanks for having me.
We'll be back next week with another fascinating topic. Until then, stay curious, keep learning. All right, so we've talked about a lot of
Yeah.
basic stuff like, retirement accounts, those HSAs,
Right.
and then all the way to like family trusts and optimizing your business structure. It's a lot to take in, but I got to say, it feels good to know we actually have some control, over how much we pay in taxes.
Absolutely. It really is empowering.
Yeah.
And it's not about like cheating the system or finding loopholes.
Yeah.
It's about being smart with your money, planning ahead.
Exactly. But I mean, we've covered a lot of ground here.
We have.
So maybe for our listeners, like where do they even start?
Yeah, that's a good question.
With all this info, where do you even begin to like optimize your taxes?
Well, I always say the first step is really taking a look at yourself,
What?
self-assessment. Look at your income, your expenses, your assets, your overall goals. What are you working towards? Retirement, buying a house, starting a business.
Okay, yeah.
Once you have a handle on where you are now,
Right.
and where you want to go, you can start to figure out which of these strategies are gonna fit your situation.
So it's like creating a tax roadmap
Exactly.
based on where you want to end up.
I like that. That's a great analogy.
Okay. So self-assessment, that's step one.
Yeah.
What comes next?
Research.
Oh, okay.
There's so much information out there. You've got websites, you've got blogs,
Right.
podcasts.
This one.
Like this one exactly.
Okay.
So take some time, explore those strategies we talked about, and really focus on the ones that make sense for you,
Yeah.
your goals.
Yeah, and definitely take advantage of all the amazing resources that are out there, including informative podcasts like ours.
Right.
But really, I mean, seriously, find sources you can trust.
Absolutely.
Verify the information.
Yes.
Don't just believe everything you read online.
Good advice.
So, okay, you've done your research.
Yeah.
Let's say you're still feeling a little lost.
Right.
Like, what's the next step then?
Then that's when you call in the experts,
Oh, okay.
talk to a financial advisor, a tax professional.
Yeah.
They can give you advice that's tailored to you,
Right.
taking into account all those specific details about your life and your goals.
Okay.
They're like your financial allies, right?
Yeah.
They can guide you through all the complicated stuff, all the ins and outs,
Yeah.
and help you make, really good decisions.
So it's like having a financial coach in your corner.
Yeah, that's a good way to think about it.
Okay, I like that.
Yeah.
Any final words of wisdom
Oh.
for our listeners as they start their tax optimization journey?
Just remember, tax planning, it's not a one-time thing.
Oh,
It's something you got to be thinking about all the time.
right.
Tax laws change,
Yeah.
So stay informed, adapt your strategies as you need to.
Okay.
Review your plan regularly, stay up to date on any changes in the law.
Right.
And don't be afraid to ask for help, from those professionals
Yeah.
when you need it.
Couldn't agree more. It's about being proactive, staying informed, and just kind of always, refining
Yeah,
refining your strategies
absolutely.
to stay ahead of the game.
Right. Keep up with the changes.
Well, I think we've given our listeners a lot to work with here.
I hope
A
so.
lot of strategies, a roadmap to taking control of their financial futures. I
Exactly.
feel good about it.
Me too. It's been a pleasure sharing these insights, and hopefully we've helped our listeners feel a little bit more confident, a little
Yeah.
bit more in control when it comes to navigating the tax system.
Yeah, absolutely. Thanks for joining us for this detailed discussion.
My pleasure. Thank you for having me.